why don't we get on the same page and I'll explain some life insurance terminology, and then when I get to the bottom of the page, you will be able to tell me what's important to you, because it doesn't matter what I know until what's important to you comes out. When you tell me what's important, that's when I will shop the top carriers in the country as an independent agent and find you the best value for your dollar. So you've heard the word term. Term is a period of time, 10, 15, 20, 30 years, goes to age 85. I'm 63. I can't even apply for a 30-year term because it takes me past that. I can apply for a 20. The least expensive private insurance is a 10-year term policy. All insurance has a cost of insurance that's based on the face amount, the risk factors of your age, underwriting, gender, health, and tobacco usage. Term has a level premium and a level death benefit, right? We use term mostly to cover debt. Now, the next one you might have heard of is whole life. Whole life goes to age 100, all right? Cost of insurance is based on the same things. It has a level premium, and in most cases, it has an increasing death benefit because it pays dividends, and there's a cash value growing at somewhere between 3 and 4%. There's ways to use whole life that enable you to borrow money from yourself and pay yourself back. There's ways to use whole life to supplement your retirement. There's another one called universal life or flexible premium adjustable life, which works a little bit differently. All right, let's say that your premium's $100 a month. Your cost of insurance might be $20. The difference between those creates cash value, and you have $80 a month going in for a year. Now, universal life is a mix of annually renewable term and whole life, which jams it together. So the cost of insurance goes up every year. So what happens is this is just filling up until one year it matches, and then years down the road it might be $300 a month for the cost of insurance because your insurance costs more as you get older. And this money in here in the cash value is not really yours. It's there to pay the future higher cost of insurance. You still pay $100, but when it's $300, $200 is coming out of your cash value. There are niche spots to use this, and there's a time and a place. Now, another thing that comes from life insurance companies are annuities. Annuities are similar to CDs at the bank. The longer you put it in, the higher the interest rate. There's three kinds of annuity companies. There's fixed, there's indexed, and variable. I don't hold a license to do variable. That's a securities license, and I wouldn't do it anyway because variable is in the market and you can lose principal and interest. I can write fixed and fixed indexed. Indexed, you're participating in the market, but only the gains. You don't participate in the losses, and fixed is a straight interest rate. Now, why do I mention this? Well, if you had a 401k or an IRA, all right, you're supposed to be putting $458.33 a month into that, times 12 months is $5,500, times 35 years is $192,500, plus interest of maybe $200,000 and change. You might have $400,000 at retirement. If this is accumulation, and then this you want to do at retirement for payout, and that is probably about $2,000 a month. That's great. If you had Social Security to go with it, and no bills, you could do well. But that's 35 years. There's ways to use life insurance to supplement this or even do better than this. Now, what we do is figure out what you have and what you need. Okay? So, Mr. and Mrs., all right, let's say you have $50,000 at work and that's term, group term, and your wife is covered with a $25,000 plan from the same group. Okay? Your needs are, one is final expense, two is mortgage protection, three is income replacement, four is leaving a legacy, and five is retirement. As I said at the beginning, when we got to the end, you can tell me what's important to you, and that's what we'll do. And if I can keep that in your budget and help you with your retirement or what you need to leave to reduce the burden on your family, then we can do business, right? Once we do this, you've finished watching this video, click the consultation button, fill out the form, and I'll give you a call. We can talk about what's important to you.